Hi, Richard here on Tuesday the 5th of October. Chart of the Dow, and you can see that our overhead resistance is still intact, spike high. We've got a push through and a retracement overnight out of New York, and today we've got the potential for a start of a trade to the downside. The basis of this is really on the reporting season already. There's some gloomy potential for the October reports to come out after what has extensively been the most powerfulest September on record in terms of the rise. So this whole rise up here has been the fastest extreme, but just reminding you that we've got 3 points of resistance here, which is very real. The 61.8% retracement of this April to July low, the triple zigzag, which is an Elliott count but is a series of 3-wave corrections and a 5-wave to complete, which it's really looking like doing, as well as the overhead resistance we've mentioned. So targets are the 10,500 down to the 10,400 mark before we get some resistance and pullback before we know which way it's likely to go from that point. This next chart is a chart of the Australian market, the SPY, the ASx 200, based on the weekly chart. So I just wanted to show what's occurring here, because really this head and shoulders pattern is still intact. Clearly the bullishness has meant that over the last well, really 3 to 4 months, this sideways activity to up has meant that we believe that we're still intact for a return to the golden days. But I have to say that we need to watch very carefully this 50 moving average. We need to respect the fact that this diagonal sloping head and shoulders has the potential to unfold, and that means lower prices. So are we into the next phase of the bear market? Well, the jury's still out on that and will be for a couple of weeks. Certainly there's some contrasting information that would suggest that we may well make higher prices later on, but either way we want to trade the short-term market. So on the Australian daily chart, you can see that we have crossed under the short-term moving average. We've spiked up higher to test it at 46.50. That took our stop out, which was a pity. However, the opportunity is indeed to enter short to trade this down after the RBA decision, because that's on today. The pundits are saying that, the economists are saying that it's likely to go up a quarter of a basis point. The cash rate, I haven't looked at the 90-day bank bill rate this week, to be honest, but I suspect, I just feel, I'd be surprised if they're actually going to put it up. But very difficult to punt either way. But what we can see is the MACD's crossed over. We're looking short. We're coming off key reversals. The target is 45.40 for that particular trade to the short side. Looking at the financial sector within the Australian market, we've come up for 5 to finish this triangle, and then we came down for A to B and off what is known as the E wave, just to confuse you. It looks like we've come down in the first wave, coming up for support to the second, and there should be a third wave following this, which will look something like this in here. It is always the longest of the 5-wave segments, so I wouldn't be surprised to see this pushing down. So there's opportunities in the financial stocks to the short side, as well as to trade the financial sector. The Aussie dollar, the Australian dollar, well, it's meteoric rise. The fact that it's completely overbought on the RSI, this is now pushing into record territory in terms of the length of time that it's spent overbought. You can even see here during the GFC, when it traded off very heavily, it was a spike down and then closed back up quite quickly, even though the extreme of the move down was very much stronger than what we're looking at here. The reality is that this is an extended period of time to be overbought, and today's market, you can see, is opened already, and I wouldn't be surprised, depending on the RBA decision, to see this trade down. And if it did, then we'd be looking at a retracement down towards the 93.80, 94 mark. And in the event that it was heavier, then that would go on. Now, a lot depends on what's likely to happen with the US dollar index, But either way, this is what we would call an ending diagonal. So there's quite a bit of trading opportunity in between those two marks, that support line. But if it broke through here, then we'd certainly be on our way lower, and I would say that we'll test what was the old high here, 93.86 actually. We'd come down and we'd test that, take a breather then to determine what the likely next direction is. The euro is very telling though, because it is a we've had a dark cloud cover. We've got a very much overbought stochastic. We're coming off the fourth wave resistance here, which is often the point in which it pulls up, and also on the Elliott channel you can see these are equidistant and equi-shape. That has come up, and we've got an absolute intersection there, which we've been watching for a while. We've talked about that fourth wave high, and that is a target. So lower prices for the US dollar index, for the euro, based on a higher value for the US dollar. So as the US dollar pushes up, the euro will come off, and if the indices come off in line with it, then the commodity currencies of the Canadian dollar as well as the Australian dollar will also come back down. So that's telling, and indeed it will also be telling for gold. This is a weekly chart. Here's a very significant resistance in the form of a long-legged doji or possibly a hammer, and this 1, 2, 3, 4, 5, 6, 7, 8, 9 week straight shot up. We've got to see some support, some trade-off and correction activity soon. Just when, I'm not sure. Certainly when we see there is reversals, we're looking at these spike highs. They're usually a very good telling indication that the market is about to turn. Indeed, we saw this little doji star here on the weekly which traded down, but that hasn't happened yet. So expectation is for this to continue to trade higher, and if that is the case, then I'm not exactly sure what that's going to mean for the broader indices. I presume that as we seem to be trading as all one market at the moment, i.e. the indices, the currency, and the metals, as they trade up, we would expect the correction I've mentioned, and then support to take us back up. So what the daily chart, this support line would continue to track up here. So we've hit first target of 1303. We're on to the second now. That's actually been hit. Not quite the $1323, but slightly under, and we'd expect this to trade back down to find support here. It's certainly overbought on the stochastic, you can see, but we wouldn't look to go short on this until that had broken down. So that's it for the Market Forecaster. For more information, go to the marketforecaster.com.au, and you can see all the charts and details, more detail. And in the event that we do get a sell-off, well, we'll be reporting it here.